So I was talking about the statement that the finance minister made in her budget speech about moving to a debt to GDP indicator from fiscal deficit as such. The question I have is, what is the big change here? Because when GDP grows at 7 to 8%, debt to GDP ratio is automatically going to fall, right? And you're not going to see
not automatically going to fall if the deficits
unless
are too large.
Unless if you're borrowing more than the rate of GDP growth.
See, there is what economists call a debt dynamics equation. It's actually one of the few equations in economics which actually works, because it is, it's that you look at what is this year's opening stock of borrowing, what is your fiscal deficit, which is the incremental borrowing in the year, what is the interest rate on the previous borrowing, and what is the rate of growth of the nominal GDP, and what's your primary deficit. I mean, what the key indicator there is, how much new borrowing are you doing. So if you calculate this, you can decide what is that deficit which will lead to a compression of the debt to deficit rate. It's a simple, one of those few equations in economics which are actually true, which are not theories. I mean, there's an actual function which works. So the difference, what is the difference? Earlier we used to say our deficit target is X. And we have said that. We have said our deficit target for 2025-26 is 4.5%. We have said that it will be 4.5% regardless of whether the economy is growing at 10.5, 11, 12, 10, 9, whatever. It's 4.5%. So that's a flow target. What we are saying is after 26-27, we will set a deficit target in such a manner that the debt comes down. Now, we are not saying it is 3%. The key difference is we are not saying it is 3%. So what I can say is if we reach less than 4.5% next year, then thereafter it will not be above 4.5%, but it may not be 3%. And that is the key statement in that sentence. And because we have calculated that with a deficit somewhere between, say, it's a calculation. It has inputs like what is the nominal growth rate. Nominal growth rate depends on inflation. What is the prevailing interest rate on government securities? Because that's the rate at which our old debt will grow. The old stock of debt grows at approximately 7% because interest on that, if you add, the cumulative balance is increasing at 7%. The GDP is growing at 10%. There is a particular level of fresh borrowing which you can do and keep the ratio declining. It's a mathematical calculation. That calculation for India with its current high growth rate, nominal growth rate of more than 10%, yields a figure which could be substantially higher than 3%, but lower than 4.5%.
Okay.
Whereas for a more advanced economy where the nominal growth is much slower, if it's 2% real growth with 2% inflation, then nominal growth is somewhere like 4%. So this 3%, there are multiple theories on its origin. It's like the origin of a rishi, nobody knows. I mean, it could have been the Maastricht Treaty. If it was the Maastricht Treaty, then those are countries which grow at 1 to 2% and of late have not been growing at all. Or it could be some theory that the total savings in the economy is so much, half of it is for the private sector, half of it for the public sector. Nobody knows why it's half. Why not 40, 60, 60, 40? But anyway, on that basis also it's 3%. But 3% has no scientific basis whatsoever. It's an arbitrary number. So what we are saying is we will have a dynamic fiscal deficit target. We will keep the deficit declining in all normal years other than pandemics, wars or something like that. So which means we would like to get that deficit down. How fast, how far, we are not stating at this time. But what we are stating is deficit for 25-26 as already committed in Parliament in February 2021 will be less than 4.5% of GDP. Thereafter, it will of course be not higher than the deficit of 25-26, but it may not be 3%.
Okay.
And it may be something in between, which is enough to keep the debt to GDP trajectory on a declining path. Now, that declining path can be a rapid declining path. We have not said that. We have said a gradually declining path.
That's an important clarification because you're giving yourself a lot of elbow room so that you're
not... Yes, but below 4.5%.
Yeah, below 4.5%. That's fine.
Yeah, that's right.
Talking of deficits,
the reason for that is that being too tight on this could affect growth. We are trying to balance growth and fiscal responsibility. And being too tight below 4.5% does not seem to be the right thing to commit to at this point.
So there's nothing sacred about the Maastricht Treaty. It's 3% anyway for a developing economy. What about the primary deficit, sir? It's still 1.2% despite all these reform measures. Isn't that worrisome?
It's not worrisome because India has a high nominal growth rate. What are you investing this primary deficit in? If you're investing the primary deficit in income creating capital assets, then it's not, that's the whole point of this debt dynamics equation. If your economy is growing rapidly, then even with this primary deficit, we have our debt to GDP coming down. So if it's gradually coming down, it is not as critical to eliminate the primary deficit as it would be if the economy were not growing rapidly. This is the key point. It's possible to run a primary deficit and still have a declining debt to GDP trajectory if the GDP is growing, because the denominator has to grow faster than the numerator. That's a simple arithmetic of this. So if the denominator is growing rapidly, which it is in India, it's currently growing conservatively at 10.5%. You think it should be 11.5%. Very good. It will decline even faster. It's 11.5%. So if the denominator is growing faster, the numerator having a primary deficit of 1.2 is not a problem in itself. I mean, we are not saying 1.2. Next year it will be lower. But after that, how low should it come? That's the point of it.
Got it.